one of the things that I want to stress here is that the live trade signals was never meant to be, when I've talked about it a lot like it was the training wheels. And you can use training wheels as long as is necessary for you. But it was never designed to replace you becoming a proficient trader. That was never the idea of it. And the thing about it is that, yes, follow along, but more than anything, a lot of what we've heard from members who were in MAP have said to us, seeing how we were managing things in live trade signals really opened up their eyes to a lot of the different things that we were doing in MAP. And that was really it has multiple purposes. Yes, the signals are there, but beyond that, it really is partly there so that you can see that if you actually just followed, anyone who's been here, and you've all been here for plenty of time now to see that if you just followed the signals, yeah, we've had some drawdown periods. We had a losing week. We've had a couple of weeks where we've had some drawdowns throughout the week. We've had some weeks that weren't huge winners, but it's a really difficult way to trade what we're trying to do in there, which is extremely mechanical and 100% rule-based. You realize there's zero discretion for the results that we post that produces. That means we could have a computer do what we're doing in the live trade signals and produce the results that we've produced in there. And it is really no match for being a really skilled trader and having the ability to use discretion and make good decisions about how to manage trades and what to do with those. And the biggest thing for me that I had with live trade signals has been to show you that you can do it. That if we can do what I think is the hardest way to do this, which is this very mechanical way where we're really limiting the amount of risk that we're taking, that if we can do that, then you can learn how to do this if you commit yourself for it. And so we're going to dive into some things. Actually, today's chart that we're looking at is so good. We could literally just teach like an entire day on the chart that we're looking at right now. It's just so good. Almost everything we want to talk about is just right here on the chart. So it's really phenomenal. And with that, David, I just want to check in. Is there anything that you want to, any questions or anything that we want to cover to start off?
I don't have no questions from anyone yet to get in anything. So guys, gals, put your questions in the question section if there's anything to address.
So, okay, great. It looks like somebody's having an issue, but that's it as far as I see. Yeah. I don't see any questions either. People can hear us, is that correct? Did we get that confirmation?
I think everyone can hear us.
Okay. Okay, great. Someone can hear us. All right, good. Then we're not just talking about stuff we know for the two of us. All right, good. So let's dive into, we'll just start at the top of the chart. How about that? So over here, we had in the live trade signals, you'll remember we had a short that was 55 and the stop was at 58. So let me just draw this in. Would look something like that. And actually, there we go. So there's 58 and the entry was 55. So there's that. And I did say in the live trade signals that this was technically, the stop never got hit. So you could keep trading that. Now, what I did, I want to tell you what I'm looking at here. I'm looking at between 55 to 58. I'm looking at, I want to get short in this area. Okay, so somewhere in here, I would like to sell. Now, I do not generally have a limit order just sitting right there, and I may or I may not, it just depends on the trade, and I'm going to talk to you about the different parameters that exist. This is a thing of beauty right here, so we're going to jump over and look at that. But I'm going to talk to you about the different parameters that might exist. Now, where did this, I know that's not a prediction point, and I want to talk to you a little bit about, so where did this come from? Without going into detail, we've been working on a new prediction point indicator for you for months now. And currently I'm the only one that has it, but this was from that prediction point indicator. And what it is that prediction points are both a stagnant price and they move throughout the day. And this was on the new indicator, this was a price you would have had. And that's why I gave it to you. And I posted it in map as this being this 58 area was really a breakout for higher. So they ended up holding that. Anyway, that's really all I know what to tell you. There's really nothing here on the chart that I would see that would tell me that this is going to really get sold. If anything, what we talk about with support and resistance, this was resistance 1, 2, 3, 4 times. I would think that the next time up, they're probably not going to sell it, except that the prediction point that was here had not been tested yet. And so it made sense to me that they were going to come up here and test this. And okay, so basically, what do? This is a 5-minute chart. It might be better to break it down in a 1-minute chart. So let's jump over and look at that. That does not mean that the 1-minute chart is the holy grail and that's the chart that everyone should be using. I just want to break it down a little bit and I want to show you what I might do in a situation like this. So this came up right here and I did end up getting short. So I'm gonna just walk you through what I did. I got short right here at 55.50. So it came up and it looked like, okay, this looks like it's gonna be okay. So I got short at 55.50, which immediately limited my risk because once this moved away like this, my risk was just a tick above here is what I did. And I knew this was a bit of an area that it could, we could see this could come up here. Okay, it could come up again. Anyway, so I moved my risk right to there. And this is probably really obvious, and I'm going to say it anyway. Have you ever noticed that if you looked at a chart, every time there was a reversal, there was a 1-minute candle that the top or the bottom of that candle didn't get traded through? They didn't ever trade above or below that. And this sounds really silly. If somebody took just this clip out of the training and posted it, it would sound really funny. It would be like, that guy's talking nonsense. But if you actually hear what I'm saying right now, like that's not the reversal because that traded above it, and that's not the reversal because that traded above it. Well, maybe that's the reversal because nothing's traded above it. So my goal really has just been, can I pick the candle? If I know this is the area that I'm looking to get short, can I pick the candle and have no, very, very little risk? And if this is going to be the reversal candle, then nothing's going to go above that. Because if something went above it, that would be the reversal candle and not this one. So I know that seems probably simple. You might have to watch it 10 times to have that even make any kind of sense. But just to give you an idea, that's really what I'm looking at. Going, okay, maybe that's the top. All right, great. So can I get short? Well, I had a limit order sitting here, so it got filled already, so that worked. And then that ended up coming down, and I ended up covering at 51, sorry. So I covered some of that at 51. Why? It just came down, and if you looked at a 5-minute chart, what it looked like, let's just duplicate this over to another tab and look at a 5-minute chart. I'll show you what I saw. You see, right, this was where it got filled, and then it came down, and you see there was the low of this candle, and let me bring that over here. There's the low of that candle, and it just hit and hit and hit on that, and it probably hit that, I don't even know how many times, like 12 times or something. And I just thought, okay, it's not going to break. And I just covered some at 51. And then it came back up. I got out at break even. And then I didn't short this again. Now you could have shorted this again. It was really up to you. let's jump back over to so the idea would be, okay, maybe it's going to come up a little higher. You might not know where to get short in here, so you might not get short. But when this happened, this would be pretty advanced if you were shorting, but we could talk about it like this. You don't have to guess where the top is going to be over here. You could see spike up, we've talked about that in the previous trainings. You can go back and watch that. Spike up, and then came down, and then came right back up. That would be an area that I would want to short it again. And then I'd want to see it really follow through from there. So if I ended up shorting it here again, then I want to see some pretty decent follow through, which didn't happen. So you don't have to try and guess the top. Some of you are going to be really good at this, and you're just going to have a limit order sitting there. Over time, you're going to get good at that. Spike up. Okay, maybe that looks like the top now. And then this came down, and you can resell it again right there. And then pretty nice movement away right there. Okay, so that's a way. We never came up above over here. So the idea, the trade idea is still valid. It never broke out. So the idea of the trade is still valid. That's why I said it hasn't broken out. You could keep trying to short. So I wanted to talk a little bit about how you might do that. So David, have I said anything that's made people ask questions yet?
No, I guess let's just pause. Any questions on that? Because I think that's a really
Yeah, that's a lot.
thing.
If you don't have questions about that, then I might have lost you somewhere.
I think you addressed this. Mark Anderson asked a question. I just want to make sure we address it specifically. If a new trade initially moves quickly 2 points in your favor, but then slowly moves back to your entry price, should you consider scrapping the trade at close to break even? Question mark.
It's a great question. The tough thing about trading is the answer is usually it depends. So, David, what would you say? I mean, from your perspective, how would you answer?
Yeah, I'll take the context in just how you answered that. So if you look at the getting back in and the spikes, like something in my trading that I've always tried to do, or a rule that I try and do, is if I enter a trade and it doesn't work, I don't really chase it and do a worse price. I always look for a better price to get in, or you can call it confirmation. And in this example here, you have those spikes up, so it comes back to your entry. If it's coming back to your entry, there might be a good opportunity to get out at break even and wait for a better price to get in. So you could put a limit order up above that by a point or two. Or you wait for the spike to validate, and then you get in at both of those arrows that you showed there. So I think there's definitely two options here. One is, okay, 55 didn't work. Well, let me try 56.5, or your zone is 55 to 58. If 58 breaks, the trade's no longer valid. But you could try another. I tend to just do limit orders for my entries. And so I'd probably be looking to enter at a limit at around 56 or 55, 56.5.
Yeah, so what I would do, if I was going to put in a limit order, and David, you probably would take a similar approach. What I would do is I'd say, okay, I was trying 55 and that didn't work. So then I would say, if I was going to do it again, I looked back on the chart, and I would probably look at where would I want to get short. And I would say there'd be two areas that stand out to me. It would be right here, kind of the bottom of these candles right there. Okay, that's 56.50. And then the other area would be right there. That's 57.50. And then the high right there is 58. And I'm not trying to fight anyone over ticks. So if I enter a couple of ticks in front of that, this is a relatively small zone. We gave 42 to 49 earlier, and we'll maybe jump over and look at that in a little bit here, but that gives you an idea. So that's what I'm looking at if I was looking for something like that. And if we look back over here at what we marked off, where does that leave us? It leaves us basically, let me get rid of I was highlighting where it had kind of spiked up there. but right here, and that's what I would be. So there's that second spike up at 56.50. And then if that didn't work, then I'd be looking right there, 57.50, and I'm probably going to short a couple ticks in front of that. That would put me in at 57 right there. And then my risk would go right there once this starts to work. And then one of the things I might do, which I'll probably regret saying this at some point, but I might, when I see this come down here and stall out down around this area, I might go, okay, so I was in over here at 57. It's gone 4 points. I could cover all of it or some of it, and then I could resell a bounce back to this area for lower. So I could cover some right here. Maybe if I have a 3 lot on, I could cover 2 of them, and I could resell a 3 lot right there. And that's a bit advanced. So that's why I said I might regret saying that, but you know, you better be good at managing your trades if you're going to do things like that.
So a couple questions on regarding the area being retested. So you showed in Globex there that area was tested a couple of times.
Well, this was actually yesterday, I think. I don't know if it was in Globex. Oh, it was in Globex.
Yeah, yep. Yeah, Globex, and it might have been yesterday too. Yeah, so it was in Globex. Kind of hung out there a couple times in Globex. How do you think about the number of times it's tested versus for that area to be valid?
Yeah, I want to, so make sure I come back to that because I want to answer a different question first and then come back to this one. I want to set some context up for this. So here's the deal about one of the things that, so those of you that are doing that took advantage of the promotion that we offered over the weekend and that are doing MAP and are doing the decision-making course with us, one of the things that is going to happen here is that here's how I would really answer that question. I think it was Mark that asked it, and here's how I would answer that question. It really is like 50% about the market and 50% about what is going on in your head when you're making the decision. And I would say that it's actually, unless you are clear about what's going on in your head when you're making the decision, whether to take the trade off at break even or leave it or whatever, whether or not you're going to do that and how you're making that decision, what's going on with your thinking is really important. And we could look at what's going on in the market. But I think last week we gave the example, if you're a guy driving a Formula One car around a corner and all you're thinking is, I don't want to crash and die, you're probably going to crash and die. And so if your motive behind taking the trade-off is, well, I don't want to turn it into a loser, well, the market, that's got nothing to do with the market, nothing. Now, if I'm seeing, okay, 55 was kind of the first area, 56.50 was the next area, and then 57.50 was the next area. So when this came down here, came there, this better hold right there. This time right there, that needs to hold if this is going to go lower. Otherwise, it's probably going to come back up and try this higher level. So if I'm short from up here and the market comes down here and it comes back up to here, and then we see this move and then it comes back up here, okay. I'm scratching the trade when it comes back up here. I don't even have to wait for it to get back to my entry. I already know that this needed to work for this thing to really move lower, and that didn't happen. And do you hear that it has nothing to do with, well, I don't want to turn it into a loser, so I got out. It has everything to do with that held. Wait a minute. If that's not going to get that follow through, then this isn't really holding. It's going to come back here again. Where's it going? Next level up to test. And this is extremely common, and it happens all day, every day. The market tried there, didn't work, tried there, didn't work, tried there, worked. So instead of in the live trade signals, maybe you can start to see some of the challenges of how do you communicate all of that in a single post? You know, you don't. So it ends up you end up taking some bigger risk than what's necessary. Okay, so, and we didn't get anything on this trade, but this is, I mean, as far as our stats go, we didn't get anything here. But I wanted to show you that the area worked. It's just, there's this balance of in the live trade signals where we don't want to post something. These would be difficult swings to post and then have you replicate it. And we're not going to do that. We're not trading to have our stats look good.
Yeah, I mean, we could easily do that and pump our stats, but that's not the goal of what we're trying to do.
Yeah, very easy. If you want me to do that, I can do that all day. But but it's not realistic that you're going to replicate those kinds of results. I've known a lot of traders that told me, I was trading on a call with so-and-so, and I could see what they were doing, and they were making money, and I was losing money. Yeah, it's really hard to replicate something in real time like that. So that's why we've taken the approach that we have taken. And generally, from the time when we give the signal until when it happens, there's plenty of time for you to, usually you can take a coffee break or go out to lunch and come back. So, and it's for that reason. We're not trying to pad our stats and have it look good. So
there's another question that came up, and you and I talked about this before, and again, it's a little bit more of a more advanced trade management, but what if the trade doesn't work? And the way, there's an option, you can just have your stops, and obviously our stats have the stops, but there's also maybe something more catastrophic where if you see your level break and then you manage it out to closer to break even. I'm thinking about that. So maybe you can talk through that a little bit.
Well, I really want to get into how to manage a stop and what stop losses are for. And the problem is with stop losses is that they've been incredibly misused, and it's a thing that traders don't really understand the purpose of a stop loss. So, and there's a really useful purpose for them, but probably not the way most traders use them. So, okay, in other words, I'll put it like this. I can't remember the last time I had my stop loss hit. And it's not because I don't trade with the stop loss, because I do. I just know how to click the button to get out of a trade. So, okay, so we'll talk, so we'll come back to that, make sure we come back there. Okay, so the big thing I want to stress here is that what's informing your decision making is very important. The same way that if you were watching a chart of crude oil and making decisions of how you're going to trade the S&P, you probably wouldn't do that. You probably wouldn't manage your S&P trade based on what's happening in crude oil. I mean, maybe you would, but let's just pretend like you wouldn't. And, why would you manage your trade based on thoughts that you're having as opposed to what's actually going on in the market? That's not useful information. Oh, I didn't want to turn it into a loss. Okay, what does that have to do with anything? Nothing. You just have to recognize that. So that's a lot of what that's very, very basic part of what we'll be doing in the course around decision making, but you will know what drives your decision making and be very, in tune with that. So that's the best answer I know how to give. If you're doing it because of a reason in the market, great. If you're doing it because you didn't want to turn it into a loss, or you didn't want to give up profit or whatever, that's got nothing to do with anything. Right? You just wouldn't do that. That's like a quarterback when they asked him, well, why didn't you throw the ball to the guy that was wide open down the field? It's like him saying, well, I didn't want to throw an interception. Okay, that's got nothing to do with anything. Right? It doesn't matter. It's either the play here is here or it isn't, and then you just do what the market tells you to do. All right, there's that didn't work. There's that didn't work. It would need to hold there if that's going to work. So then it came up here. Here's a great example, classic example. Traders get short right here, or they missed getting short up here. So it came down and they go, oh, I'll get short right here at this 55. You see how it kind of came down there, and then traders will get short right here. And then man, if I had $1 for every time I have seen this, I would buy you all a private island, each your own island. That's probably how many times I've seen this kind of thing happen. So a trader says, well, I got short right here when this came down here. And then when it didn't follow through right here and it came back up, I got out. And then I would say something like, why did you get out? And they would say, well, because I lost a point over here and I didn't want to lose any more over here. Oh, great. Now we're trading based on your account and what you want and don't want. Well, that's probably not going to work that well. I just trade based on what the market is telling you. What the market's telling you is that held so far. You could even bounce back up to here, ideally not, and then could easily and really should bounce back up to here before going lower. Okay, because we knew this area was important. It stopped this move up. I mean, look at all the activity right here. They're probably going to want to check this price here. Test one more time to see if it can break. No break, it's going lower. So that is much more, that's why I said it matters. The context matters. Can it come back up and test that and still be okay? Yes, in this case, absolutely. Okay, fine, then there's nothing really to be worried about. Even if you were short right here, you could hold through all of this. I don't know why you'd do that, because you could literally do this with almost no risk if you did it the way I just described here. You could literally just hold this and go, it's okay, it can come down, it can come up, it can come down. It can still come anywhere up into here as long as it doesn't break up here. And then that ends up working out, okay? So the context matters. What's gone on, what can still go on, what makes sense or not, all of that matters, right? So, okay, I think we answered that part. So there was a part that I said I wanted to come back to. What was it that I said, let's make sure we come back to that?
The stop loss, so the advanced trade management component.
Yeah.
Or if the trade becomes invalid.
So was that it?
I think so.
I thought there was a question before that. Okay, so if you had a question, we didn't answer it, then make sure you put it in there again. So what do you do with a stop loss? I think I said this before and I'll say it again. Actually I have the reply from a well-known hedge fund manager. And when asked what he did with stop losses, what if he used a stop loss? He said, generally, when people ask me if I use a stop loss, I laugh and I say, no, stop losses are for rookies. And he said, and I'm partly kidding, and I'm partly not kidding, because only an amateur would put on a trade with enough size that it requires such immediate and urgent attention. And I know I've said that before, but I'm saying it again so you can really hear it. So I think that's just so good to get that perspective. Now, I'm not saying you shouldn't use a stop loss. I'm not advocating for that. But I am saying to you that if you put the trade on and you're grabbing your chest and your heart's beating out of your chest and you've got to stand up and breathe, you're trading too much size. I don't know what you need to do. Well, I'm only trading 2 micros. Okay, go to 1. Because if you can't be in the trade and be unattached from what's going on, there's no way. I mean, it's just the chance that, yeah, it's just not going to work. So too much size. So what I would say about the stop and how to manage the stop, if it goes 2 points and it comes back, that depends on what's going on with you. And then, if there's so many different ways you could do it. So let's just say the trade doesn't work. That's the question, right? So the trade doesn't work and it goes right through your level. Well, having a catastrophic stop for that, here's what stop losses are for, in my opinion. This is just my opinion, okay? This is not trading advice. You should not construe it as that. My opinion is that stop losses are for when it all goes wrong. That's what they're there for. So I have an area that I'm looking to trade. And if it all goes to hell, I want to know that I'm just going to get out and it's going to be okay. And that's what the stop loss is for. Now, we don't treat them that way in the live trade signals because traders may have not yet developed the skill to handle it that way, and there's a lot of discretion involved. But if you look at an area, I don't know, let's see if we can find something where it just sort of goes right through a level. It's hard to find when you start. I mean, this would be the closest thing. I mean, unless I'm missing something, but none of that looks like it just went right through it. It paused at every level here. That paused. I mean, even this is, I mean, that paused. Even this is enough of a pause that I would get out of this at break even, or maybe I'd lose a few ticks or something. That is probably the best thing, okay? And even that is still, I mean, it came up and it came back down. But let's just say it all goes wrong. I probably want my stop loss just up above over here. So this comes up here and I don't get that reaction that I'm looking for. I'm probably just going to get my stop hit up here. I don't know how big that is. See if that's a risk I could live with. 31.25 to 32.50. Yeah, I can live with that risk. So like a 2-point stop. And what I'm looking for is when this comes down here and it stops and it sits here like that, and this is kind of hanging around, yeah, this better go. If it's gonna, look how fast it's coming into the level. I didn't think this was gonna work ever anyway, so I was sort of ignoring this, but I mean, if you were trying it long here, yeah, this thing was not working. By the way, a trade can be not working and you can be 2 or 3 points in profit. That happened, in my opinion, that's what happened up here on this trade. This was not working and I was up 4 points on it. And I thought, okay, this isn't working. I'm going to cover it and then try it again. You don't have to be losing for a trade not to be working. This was not playing out the way that I wanted to see it play out. And it kept hitting and hitting and hitting, and it was just not breaking this. So I finally just thought, okay, that's not working.
I think that's such a great point, right? That you can be in profit and the trade not work. Like you can still have a trade that doesn't, you believe not to be working, and still take a profit on it.
Well, it's really about what are you looking for, and we're gonna dive into that a little bit about what should you be looking for in the trade when you're putting the trade on. You know, what kind of a reaction are you looking for, that type of thing, right? But I think the other thing to say, and this is a little bit advanced, so we're not going to go too far into this, definitely the kind of thing we'll cover more in depth in the map trainings. And down into here, this came down 31.25. Yes, you could have a stop loss sitting wherever right here if you wanted. You could do it like that. A lot of times, though, you're going to get this break and then come right back and test it. And a lot of times you don't really have to. It just depends on the level. First of all, this is not a level I would have been buying to begin with. But generally, if there's a really important level and it breaks, it's going to come right back to it. So we saw that right here. And even this level I did not think was very good. I mean, it had been all over this area. That was already the buying that happened there. I didn't think this was going to be much of anything on the way down. And this is actually a really good one to cover. So maybe we should jump over there and look at that. But basically, I'm looking at, okay, great, they broke, and I could be in the trade right here, and it comes down and it comes back up, and I end up taking the trade off and losing a few ticks or a point or whatever. A point or whatever for me, anything a point, positive or negative, in my mind, pretty much gets filed as break even. I'm not too worried about 4 ticks.
And so, another comment about this as a trade management as well is we talk about stats all the time, and candidly, this is something that I personally dealt with, of always getting stopped out. My stop was too tight, etc. So in my stats, what I started tracking was, once I got stopped out, how far did the market go against me after that until I could potentially get out at break even? Because I was putting my stop at the point the trade became invalid. And if I got stopped, it means the trade's invalid. But how far did the market go against me after that before I could get out at break even? And I found in my stats that like 90% of the time, it was less than 5 points. So if I had a catastrophic stop of 5 points that I was managing, and once my trade became invalid, 90% of the time I could get out at, break even or minus a tick or two.
Yeah, that's so good. So this is definitely advanced, some of what we're talking about. So let's just look at from 31, we're just going to go 5 points from 31 down here to 26. He's saying that's where his trade becomes, that's where his catastrophic stop is based on what his stats have told him. You got to hear that. He didn't pull it out of a hat. Okay.
And I actually bought that level today, 31, when it came down there, and I had the trade as invalid, 3 points.
So you were giving it to 28.
I was giving it to 28, and my catastrophic was 5 points. It came down, came back up, went positive, went in my favor, and then it dropped below it again. And on that can
on this candle, it came
down. Yeah, it went down. It went back up, and I was like, okay. Once it went in my favor and then went against me again, I was like, okay, this isn't working. I'm out, and I ended up getting out. I think 3 ticks is what it was. So
lost?
To me, yeah, 3 ticks lost. So
yeah,
to me,
so he lost 3 ticks. And if this thing would have worked, what was your target on it? At least back up to here, easy. First
target was there. Next target was there.
Yeah. So that's 5 and 12 points. And so you risked, ultimately, you ended up risking 3 ticks to make 5 points and 12 points. Yeah. That's a perfect example. I mean, you can't really, it's hard to describe it any better than you just did. So this is where the trade is invalid. And what he's saying is instead of putting a stop loss right here and taking like the literal worst position you could take, which, would be to get, if he's long, basically covering it right there. He knows it becomes invalid right there, but this was not the reaction he was looking for, and ended up eating 3 ticks on the trade instead of getting stopped out. Now you could have done that where, you could have said, look at 30 or 29 or whatever right there. Yeah, well, why, look, you're going to get literally the worst. I mean, say how many times has that happened where it comes down and hits your stop to the tick? I mean, we saw that in live trade signals, which I swear I couldn't do if I tried.
And I do hit my catastrophic stop about 10% of the time, but
so be it. And I think that's the thing of where you've done a really good job on stats is that that it's better off rather than taking a 2.5 point stop on all of your losers.
Yep, exactly. The net.
Some of your losers turn into actually winning a few ticks, maybe even, right?
Yep.
And sometimes you get a move like that and it probes through the level and then it turns around and you go, okay, no, it's still fine. And sometimes that happens and you go, oh, that's the bottom or that's the top, right? So I think those are important things to say. So have we stirred up any questions before we move on?
One question here. How do you distinguish between a temporary pullback before continuing the trend versus a complete reversal against your position? That would help decide whether you get out with some profit or patiently wait for the pullback to be over with.
We have these nifty little things called CPs. And the market is going to travel from CP to CP. It's pretty amazing how that's going to work. So, all right, we're below. You see, we came back up and tested that CP right there. So we're below these CPs. Next one's way down here. So I don't know if I can answer that, because you're literally talking about, you have to really effectively answer that. You have to break down, and I think we did this in one of the earlier trainings, David, where we talked about, we went through and we looked at what was tested, what was not tested, all of that stuff, right?
Yeah, that was either 1 or 2.
Yeah, so you'd want to understand what's the big picture telling you. And then I think an easy way to handle that is just take profits or take some profits and then rebuy it or resell it on the bounce. Okay, so let me give you an example. If you're short up here and you're short, let's say you go short 3 up here and you end up covering two of those wherever. Let's say you cover two of them down here, okay? And you're holding one for down lower. Great, when it comes back up here, just resell 3 again. Okay, and then, and if you already took profit on 2 of these, you've got 1 left up here, and it's a freebie. Forget about it. So just forget you had this one on and let it ride. And if it comes back up and gets you out, so be it. That happens. But there's your other resell, and then that one comes down to here. So I think the answer to that is you don't know. You can go with the methodology. You can determine what's the overall direction. Today was pretty directionless. Like we had really no direction. And I mean, it was basically a lot of really great short opportunities. The buys down at the bottom I thought were a little trickier, but there were still some really great buying opportunities. I mean, this one is like textbook, beautiful buying opportunity. We're going to cover this in a minute. So there were definitely buying opportunities. I was definitely favoring it short, seeing if the bottom was going to fall out of this thing at some point for, down to 3,400, which this high 20s to mid 20s has been holding. In the last 3 days, we have higher lows each day. So I'm not attached to any of that, but I definitely favored the sell side. So I think how you can deal with that, and then David, you can answer however you would answer it, but I would deal with it by taking profit along the way and then reselling it when it's coming back to me. That's how
it's so key to take profit. You will never lose money if you're taking profit along the way.
Yeah, and I think that some traders think, they have a hard time and they're taking profit at like, 2 points or something because they're afraid it all comes back to your decision-making process. There's nothing that, in my opinion, that would improve your trading more than improving your decision-making.
And doing your stats so that you can actually have an objective view of that as well. There's someone in the Discord room who's trading 3 contracts, and I think he takes 3 off at 1 point and 3 at 5 and 3 at 10. And, that seems to work very well for him. And, if you look at your stats and you look at what's the average MFE on all of your trades, you can probably identify your first profit target level pretty easily to
absolutely
take off, mitigate a significant amount of your risk while allowing you to trade some size.
One of our MAP members, we were looking over, was having a coaching call with him, and we were looking over the stats of his, for all of his trades. And it was on NQ. And one of the things that we saw was like, anytime he had a target of like greater than 60 points, it never happened, ever. It was like not happening. Nothing greater than 60 points was happening. And he'd have times where he'd have 80-point targets, and it just wasn't going to happen. It wasn't realistic. 40 points, really realistic. Happened a lot of times. And you see guys that trade NQ and they'll take like, 10 points on their first position. Yeah, that's because they can pretty much get 10 points just about every time. So if you can risk 10 points on one side and have 10 points on the other side, now it's 50-50 if you get a runner that runs. But I think, we're talking about things that like you just have to come to terms with. You're going to lose as a trader. You're going to lose. There's an app, we've talked about baseball and whatever in all these different sports, and I mean, poker and, any kind of gambling in a casino or whatever. Even the casinos are not going to always win. But there's an app that I use that for parenting, and they send these notifications and just things to help you be a better parent if you're into that kind of thing. And I don't know the name of the app, the Happy Child, okay, since you're all begging me for it. So it's the Happy Child, and they sent me a notification today, and it said, are you hard on yourself as a parent? Even the best parents only get it right 30% of the time. And I thought they need to do a trading app. They can send out notifications. Are you hard on yourself as a trader? The best traders get it right 60-something% of the time.
Yeah.
And I think traders just have, I'm going to keep saying this till the day I die, you have unrealistic expectations, and you have not come to terms with you're going to lose. It's just part of the game. And somehow you think that if, I know right now it's happening. There's people listening to this and they're going, no, I know I'm going to lose. No, you haven't really come to terms with it. You haven't accepted it. It's not okay with you yet. Because you still are upset or bothered by when you lose. I couldn't tell you the last time I had a losing day because I don't care. I don't look. I don't go back and check. I mean, yes, I have stats, but I don't like go and remember, oh, these were my losing days. It used to like ruin my week. It would like wreck my week if I had a losing day. Man, it would like wreck my day if I had a losing trade. And I've just come to terms with, and I think one of the things that you can learn from the live trade signals is you can be wrong a lot and still make money. I mean, David, what's our winning percentage? Like 30%, maybe less than that?
It's probably less, yeah. Yeah, actually, I can tell you right now. And,
Yeah.
you know, another thing to think about is that it's not about one trade. It's not about 5 trades. It's about your series of trades, the overall return that you're generating over a series of trades. So I think a focus on one trade loses, it doesn't mean you did anything right or anything wrong. If a trade wins, doesn't mean you did something right on that trade. It's the whole game. You know, I think there's Mark Douglas talks about, and Ephraim, you've talked to me about this too, is that when you identify your trading strategy and you do that over a series of trades, you become the casino, you become the blackjack dealer, you become the roulette table. And that's what it's about. You'll take the spin 1,000 times and you have to take a spin every single time. You can't pick and choose which ones are appropriate if it fits your system.
And you could look at the live trade signals as an example, as a system, which is really just me, but you could look at it as a system. And, you know, we did 28 points in the live trade signals today. If you didn't take that, you wrecked your week for what we're going to do in the live trade signals. I mean, don't be hard on yourself, but I mean, that's a really good example. One trade, 28 points. If you took it, you just made your week. That's all we need to do. One time a week. We just need to do that. That's it. That's all we're trying to do here.
Yep, and manage your risk on your losers.
Yep, that's it. And what's our winning percentage or our losing percentage?
Our winning percentage is 34%.
I'm impressed. I thought it was going to be in the 20s. And what's our profit? What's our average loss and our average profit while you're looking?
Average winner is 9.25 points. Average loser is 3.4 points.
Yeah, so 3 times we're at a 3x risk to reward, doing it mechanically, super mechanically. You know, no discretion from the trader. Okay, so yeah, I really want to stress that point. So I want to give you an example of one of the things that where's our time? Okay, we can probably do this. So this is going to be this will not be the most in-depth course we're ever going to do on this, but to give you an idea. So one of the things that we want to look at, how I determine how I'm going to take trades or where I'm going to take trades. So this area that we resold right here, okay? So what we were looking for is we gave a price to sell, but I'm going to show you the prediction point was right here. Oh, there we go. Is that it? Okay, there you go. So we said I'm going to just draw from the prediction point up to 53, which was the next area that I had. Anyway, I really just didn't want to get stopped out of this trade because I figured it was going to be a pretty nice drop. So let's just look at this real quick, and I'm going to show you what I look at. And there's actually a way that you can score these, and you can basically rate an area. So let's look at this area right here. So the market's gone down here, and this is a pretty nice sell-off, and it's retracing back up to here. I'm expecting to use this as resistance. This is a textbook trade for me. I don't know how many other traders live on this, but for me, this is, I would wait around for a month for this kind of trade. So right here.
Let me interject. If you're not paying attention, pay attention to this.
Yeah.
If you're watching the video, watch this multiple times, because this is really, really key, and it's something that helped my training immensely when I walked through it with Ephraim originally.
Yeah, so here's the tricky part with this. People see, okay, here's our prediction point. I'm going to get rid of this shadow area. So they see, here's the prediction point. And let's just make this really thick so we can for sure see what's happening here. There's our prediction point. And a lot of traders will go, okay, so there's the price. It's at 48. And you can see that worked really well. The market came down and it tested it, and that was great. And then look at where it bounced to, right up to there, 51.75. To me, this becomes the prediction point area now at this point. Okay, so now I'm looking for, on a retest, I'm looking for, this would be the lowest. 49 quarter would be better, and it could even come back up into this 50.75, and I would prefer not much higher than that. Where did those come from? That's the prediction point. That's the body of where the candle closed right there. And then that's the high of where it closed. So I really would like it. And this was the high of the bounce. So somewhere in here. So ideally, I wouldn't want it to come up above here. Now, when I originally put this trade in the live trade signals, before I sent it, I put the stop at 52. And then I thought, if they come up and spike through this and I get stopped out at 52, I'm just going to be really pissed off. So let's do it another way. And so I moved it to where we would enter again at 53 and then have the risk a bit higher up there. I don't like doing it that way, but I also like making money. So we did it this way. So now I had no way ever intended to take that kind of risk, given the scenario we walked through earlier about how to manage that. So, okay, let's break this down. So there's 3 factors that you're going to score an area or to score a level that you're trading on. And you're going to assign a point value between 0 and 5, okay? And I'm going to talk to you about those 3 things right now. So the first thing we want to look at is how long did it stay in this area when it was here. It came down. In other words, how much of an opportunity, if there were a lot of sellers in here, how much of an opportunity did they have to get short? Well, it bounced from here, went here to here, and then once the selling started, it was like game over. Okay, so you want to look at, so how long was it in this area? And I would give, for me, I would say 2 candles like this on a 5-minute chart. I would give this a 5. In other words, there was not a ton of opportunity for anyone to get short in here if that's what they were trying to do. It was about 10 minutes. I'd say 2 candles on a 5-minute chart. For me, minimum it's a 4.5. There's going to be more coming on this, but I'm just giving you a taste of it right now. This is the thing that we're going to really focus on in MAP, but this is a taste of what that is right now. So again, those of you that just joined MAP, we're going to be in communication with you about a series of trainings. This is ending, but we have a new series of trainings just for the people that are going to be in MAP. And this is one of the things we'll dive really deep into, but I do want to give you a taste of it. And also it's useful for anyone trading prediction points. So here's the level, okay? And how long did it stay in that level? I'd say not very long. So I'd give that a 4.5 at least. So we'll give it a 4.5, okay? Then I want to look at how quickly did it leave out of this area. So once the selling started, how quickly did it leave out of this area, and how, and then at the same time, I want to look at how far it went. Those are kind of one score. You're not going to score those separate. That's a massive candle. It's by far the biggest blue candle on the day so far. I'd say that's pretty good selling. the way it left the area here. Okay, so this I would give a 4.5 for how long it was there. And then how far did it go? Well, it went all the way from 48 clear down to like what is that? Down to 24. So it went far. It went 24 points. This is a 5, no doubt. Okay. How fast this went out of here, and how, look, no yellow candles anywhere, just blue, blue, blue. I mean, yeah, this is a 5. Okay. So how long was it here? Not very long. The shorter, the better. And then how fast does it leave and how far does it go? The faster and the further, the better. That's a 5. So I said a 4.5 at least. You could even argue a 5. And then this is a 5. Okay, any questions about that so far? Does that make sense? So this level that's highlighted in here is a 9.5. There's 10 points possible. It's a 9.5. Now we're having a pop quiz. I know you. I hope you have been studying. So let's see here. What's the next thing we want to look for? Some of you know the answer to this. So what's the next thing? Where do the other 5 points come from?
Anyone in the chat?
Bueller. I don't know how to get this to actually be bigger. It's really quite obnoxious. Okay. So I don't know. I can't really see all the questions. I don't know why they're so hard for me to see, but okay.
All right, there we go. This just popped up. So how fast it moves back into the level? How often
Oh, there we go. Someone was paying attention before. That's great. Okay, good.
Yep.
Yeah, prediction points change every day. I don't know if you answered that question. Absolutely. New prediction points at Globex. Okay, so the next 5 points are how fast does it come back into the level? That's what we want to look at. And the answer is the faster the better. Okay. So
you really have to get I think that's something that a lot of newer traders struggle with, is they see it spike into the level. It's moving too fast. I don't want to get it.
oh yeah, well, I mean, you look at this, what we're about to look at, and you tell me that you're thinking, yeah, I want to go short right there. Well, only some of us want to do that. Dawn wants to do that. Jaime wants to do that. You know, the ones that know. David, you want to do that.
I'm all over it. Yep.
It's like, oh, great. So it's Christmas morning. So look, the level holds right here. So what I'm saying is, yeah, the prediction point was here, but then look at this area before. And if you're selling 48 and then you're thinking, I'm only going to give that 2 points, well, that's 50. And then you're stopped out, and then it goes 1.5 points through that, and then boom, here it goes. This is absolutely what you want to see. When we say really come hard into the level here, oh my gosh, this is just so good. I would take this 100 out of 100 times. It might blow right through it, but you know, this is really good. Now, this is really good because this level is really good. This level is a 9.5 out of 10. So that makes this level is a really good level. The faster this comes back into here, and look how big this candle is. The faster this comes back into here, the better this is.
So Ephraim, just a question. I can imagine some people might be thinking, why that level versus the KP that's right below that at like 43?
Well, yeah, look, there's nothing happened here. There was no pausing here, no pausing here. And this is really the last area that it can come back up into. They could come back up to there maybe, right? So I was trying to give it to maybe to their worst case up at 55. In the event that they wanted to come back up and test this, let them do that. But this is like above here, the whole scenario changes.
Yeah.
And this validates that. So see, there's nothing to rate this on. There's no pullback from this level, or you can't rate it. There's nothing here. It blew right through it over here. It blew right through it over here. This level's a 9.5 out of a 10. This makes it a 14.5 out of a 15. If you don't take this trade, I don't know what you're doing. I mean, you know, if you know that and you go, that's a 9.5. So part of the challenge with the live trade signals is we can identify good levels, but I don't know in advance how it's going to come into the level. So it might come into the level as like a 0 or a 1. And then, you know, it's like, okay, well, what do I, you know, we already put the trade in there. So here's the level, it comes into the level, and then just immediately look at the reaction out of the level. One of the things I'm working on that's not done yet, but one of the things I want to roll out is that now that you're in the trade, how do you start rating the trade once you're in it? So yeah, there's a couple of good questions. So one of the questions is, yes, institutional trading definitely happened here. I mean, there's no way that this kind of selling happened without institutional trading happened here. So yes, you know, we happen to have a prediction point here, and then it came down and tested that, and then it gave us really this area or this zone, and that's where we want to sell. So we sold 49, there was the drop, and then, yeah, definitely institutional trading there. So Ty asked a great question about what happens if a level has not ever been touched. Well, are we talking about an all-time high? That's the only time a level hasn't been touched, is if it's an all-time high. You can't score it. That's you just have to guess. What you can rate is how fast it comes into it, and that's really all you can rate at that point. Mm-hmm. So how fast it comes into the level, and at some point the steam has to end. What's hard to trade are those really slow grind up kind of days, because and the insane drops down, because those can just like never end. But even insane selling, I mean, you definitely, if you don't have a really good level and you're seeing big selling happening, then you don't want to trade that. So this was just a beautiful level. I mean, this is a 14 out of or 14.5 out of 15. You've got a 4.5, and then a 5, and then a 5 coming back in here. 14.5 out of 15. So let me talk about this real quick.
Let me ask. I have my own question, just to confirm. Do you see that same level? How would you rate it coming out of there? So when it goes out, your candle at about 9.25, that's going out.
Over here.
Would you? No, the having a buy down at that CP at 31 there when it comes back there. So do you see that? Like, how would you rate that level? Because that goes out of that level very quickly. It kind of hangs out there a little bit.
Yeah, this is what I don't.
The other side of it.
What I don't like about it is that you basically had all this trading that happened in here. Yep. So if we were going to rate this, I mean, it's honestly not even a level I would be interested in. But I'd give it, like, I don't know. But look, if they were going to buy, there was a lot of buying over here. I mean, there was an opportunity to buy it right here. So I spent 20 minutes in this level. I would give it like a 2 probably. I mean, nothing. It's just not. This is not a level I would trade.
Yep, I think it's just good to differentiate that, because I mean, they look somewhat similar, but the
if
time
you
and
could,
the level.
I don't know how to make it, but if you could ignore anything that happened here previously, and all I was looking at was this and this and that, whole different ball game if I was just looking at these 3. But given that it was like, you know, 5, 10, 15, 20, 25, and then finally at 30 minutes it takes off.
Mm-hmm.
You know, I mean, yeah, that's yeah. I mean, this, no. If these are big institutional that's big institutional selling. They're already sitting here. They're ready to go when it comes up here. We just identified that level ahead of time. There's the drop. They were not sitting here. You know, this was just, this went up like this. This is so interesting because there's so many nuances. One of the things I've loved about teaching over the years, because I have to explain things that I'd never thought of before. So why did this go up like this? Why did we get this big candle? Because there's a difference between this drop over here happened, and let me talk about this real quick. Notice how long it took coming out of this level when we rated this a 5 coming out of here. Look how fast it happened over here. So this was, 1, 2, 3, 4, 5, 6, 7, 8 candles down to here. It happened in 2 candles over here. It's so good. If you're short, that's exactly what you want to see. And then we ended up covering it because it just sort of sat there and wasn't going anywhere. So we ended up covering it, but exactly what you want to see. I mean, it did it in, 2 candles compared to 8 candles. Half the time would be ideal, but 2 candles compared to 8. I mean, this thing's just, so there's a difference between this selling and this hard move out of here because of institutional selling up here and this big move up out of here. And here's I can't prove this to you, but here's my theory. This selling is because there's big institutional selling happening. This buying is because the big institutional sellers are waiting up here. They don't want to trade in between here. And if you are an order flow trader, you look at an order book, what that's going to look like generally is no orders in between here, or really, really thin order book right in this area. And it just sort of acts like a vacuum, and this price just sort of gets sucked up into this vacuum because there's no selling here, because there's no big institutional sellers. I'm distinguishing between big institutional buying, which is not what this was, and institutional selling, which is what this was. Now, I could just be making that up and have no idea what I'm talking about, but I'm telling you that plays into how I would rate this level. This was institutional selling down in through here. I can't prove that. That was just my theory about it. This is institutional selling. That made this level interesting coming back up here. This is just going up because no one's selling it. Okay, you get the difference? So this is going up because no one's selling. This was going down because there was actually institutional selling. It makes this area of no importance to me. I don't know. I mean, I said I could give it a 2, but.
You see that question. So would you expect lower volume for a candle that is not necessarily institutional?
Oh, on this candle?
Yeah.
Would you expect on that large? No, I would expect, let's just look. But before we load it, I think what we're going to see is a high volume candle. And I think why it's high volume is because it's the sellers getting short. Yeah, so.
Yeah, most volume of the day.
You got to think about if you have a lot of institutional sellers, I would expect high volume on this. In fact, back in the day when I wasn't really any good and didn't really know what I was doing, I would look at just a 1 minute or 2 minute candle and with the volume, and I would watch for these large spikes where I thought the top was in or the bottom was in. So I'd watch for that kind of thing. So this had the highest volume of the day. Why? Because if you have big institutional selling, guess what? You need big institutional, or you need big buying happening. Somebody's got to take the other side of that trade. That's just the reality of the market. However many contracts traded up here in these prices, you had to have sellers. You had institutional sellers getting short here. That means you've got to have retail traders buying it. So it's 50-50. Half the people are buying, half the people are selling. Volume does not drive the market. Yeah, I don't really know how much of that is close to the top, but this big long wick, how we identified this area, start to put all the context together, man, it just looks really nice to me, in my opinion. You could get a little bit better idea by looking at a 1 minute chart and see what that looked like. And let's glance at that. Right there. So there, and then there. So the highest volume is right here on this one. moving from right here. And then that's still, and then that's the second highest volume. So let's put, since you guys are talking volume, let's put that in perspective. You had more volume on this candle than you did on this candle. So if you have a theory that volume drives the market, no, this is institutional traders getting short. That's why there's more volume on this candle. And what they will do, it doesn't mean that there wasn't institutional buyers pushing this, but they're driving it here and buying and buying and buying and buying and buying and buying, where they can get more people on the buying bandwagon, and then they're going to flip it and pull the rug out from everyone, and then it's gone. Okay. So that's one of the things that we're looking for. So high volume, but this over here, higher volume than this one over here. It's so telling when you start putting all that in context. You don't really need any of that because I already told you what was happening. And you can, I mean, I literally just explained to you before we even looked at the volume, I told you what it was going to look like. So that's what it looks like. I'm not saying that to brag or something. I'm just saying it's like when you know what's going on, you already know what the volume's going to look like. It's like, well, why don't, if we load a moving average, I can tell you where the moving average is going to be. I don't need to look at a moving average. I know this is what the volume was doing. I know that based on how the candles looked. I knew this is what the volume was. I could have drawn it out like that probably. I might have had this one a little higher, but you know, it still would have been really damn close to the way it actually ended up looking. So, okay, so I want to address a couple of questions. The question was, okay, so if you were short, so the question was, if you were short here, how do you handle taking profits? I don't. I mean, it's like, you know, when you get on a roller coaster, just put your hands in the air. I mean, if you hit a trade like this and this thing is ripping out of here, just stay short until it stops ripping. That's all we did. You know, it just like this thing ripped down to here. I'm really not, if I'm managing this, if it's really easy to make money, I'm probably in the right trade. And I'm going to just hold it. And I'm thinking easy back to here, easy, easy. And then I'm just watching it. So you're asking me, and it's a bit of a vague answer, but I mean, I'm telling you, I'm just watching it. I'm going, okay, it's coming down here. Let's go back and look at a 1 minute chart. So this is coming out of that area, right? So there you go. What did I say? Easy back to here. And there you go, within 3 ticks or something of that level. That's the first candle. So I'm probably taking some of my profit down here on this first green or, you know, yellow candle that's a bounce. And then I'm holding, and then I don't like that. See that big long wick, big long wick, big long wick down in here, I'm taking my profit. And then why? Because I could always resell it here or here if it came back up there. Okay. I mean, I just got from, you know, if I was short 49 and I covered at 28 or 29, I just got 20 points. I could take a little risk and try a short here for a couple of points, for a couple of points. And if I all went to hell, I would still be up 16 points if I lost 2 points on those 2 trades. So that's how I'm handling it. But if I hit a trade like this, yeah, I'm taking full advantage of it. When this thing just starts ripping out of this level, I'm just staying short. So that's how I would handle it. Anything else we want to cover? Any other? Do we want to just so everyone is clear, David? Do we want to say anything about? I mean, this is we did 4 of these. This is the 4th one.
Yep.
And we, like I said, we'll continue to put out training. We'll continue to put out video content. And the reality is, I mean, what we're building here is a community. Really, I would say we're building a community of either traders who use our tools, and prediction points are included in those. And we believe that the way we trade in MAP is really the highest level of trading. And so we're really building a community of MAP traders. And I get that's not for everybody right now, and it actually won't be for everybody at any point. But for our map traders and those of you who are new to map and getting your feet wet with that still, we will continue. We're going to be rolling out a whole series of trainings like these that are, live, interactive, like this smaller group. And we'll be diving a lot deeper into some of the principles that we taught here today, and exactly how to rate trades. We'll look at different things. So you'll be getting a lot more information on that. So we'll
yeah, I think, to add to that, Joe, I think one of the things that will be a bit different in that training too is we'll probably be looking at some of your specific trades and your charts as a group and getting into the details of that, because that's where the collective and looking at your use specifically and your thought process and your trading decisions.
Yeah, definitely be looking at things like that. And a lot of the 12-week decision-making course, we are going to be doing that as well. Okay, I want to answer this question. So Lee, I don't understand the question that you're asking. So maybe, David, I don't know. So maybe ask it another way. To me, you're asking it's like you're asking the question but answering it, but I want to make sure we answer it. So I don't know, David, if you read that different than I do, but the answer is the question.
When you wait to ride with those. Yeah, I don't understand that. I'm not clear.
Yeah, so for me, okay, spike up, get long with it instead of going short after it's done. Look, I mean, am I going to buy on a spike up? No, I don't have financial suicidal tendencies, but I'll take that long. I'll ride that up on a spike up like that. The thing is, you don't know it's going to spike like that. I mean, after the fact, it's great. But am I going to buy after a spike like that? No, only if it breaks out. I would never buy. I mean, for me personally, I'd never buy after a spike like that unless it breaks out. Because if it spikes like that on either side, like what we just saw right here, if it spikes like this and this thing breaks out, this thing's going to 3,500 today. Like nothing's going to stop this. You get 50,000 contracts traded on this candle, and that doesn't break down and go lower. Like if this came back down here and then came back up here, I mean, yeah, get out of the way. I mean, you probably want to be long with that because this is, but I don't know where I would get long in here if I'm not chasing the market around. So if I had, let's see, I mean, I could look at like a 1 minute chart and I could say, yeah, if I was long somewhere in here, but you would really, for me anyway, I would have had to have been long like in here basically, because I'm not buying any of this. I'm not buying this. Some traders might buy that, but I'm not touching this. I'm not chasing this. I don't know how else to say that in more clear terms. I am not going to chase this up here under no circumstances. It has been my experience that these are short-lived and end badly if you try to chase them.
Yeah.
So, like I said, I do not have financial suicidal tendencies, so no, I don't buy on spikes like this. I love it when I'm long and this happens, but if I'm not long and this is happening, yeah, is what it is. Next trade. It'll happen again. I probably won't be in it, and it is what it is. It's like whatever. But yeah, this would be a trade, just for the record. This would totally be a trade. I would be interested in a long down here, because we had not come back up and tested this, which is the very last thing that I'll say. Right, so James said we had the key turns at, we had key turn levels down here. Yeah, I'm not saying you couldn't have been long, I'm just saying I'm not chasing it. Okay, that's all I'm saying about it. If you were long here, fantastic. You should put your hands in the air and ride that the same way you'd ride it the other way. But yeah, I'm definitely not chasing that. The last thing I would say about with the live trade signals for how to trade that, mark the areas out on your chart. If we're saying you can sell up here, you probably could catch a bounce up to that area. That's a pretty long ways to catch a bounce from 33 up to, or from 31 up to 51. That's 20 points. It's probably not a trade we're going to do in the live trade signals, probably ever, but it is a trade you could start to look at. Well, wait a minute. The market is down here 20 points away from where he's posting a short. Maybe I could catch a bounce up to there. That's one way you could trade it. And I think that, I think Ty's even said a little bit about how he's used it similar to that. I'm just saying there's a lot of ways to use the information that we're passing on to you, and more, you know, a lot more than like, well, I'm going to put a limit order here or there. It can provide an entire context for the way that you trade. So that's what I would say about that. Kind of reverse engineering the story by the way that we're giving you the numbers. In MAP, we give you the story and the numbers. In the live trade signals, we just give you the numbers, and you can sort of reverse engineer it to end up with the story. Oh, it could bounce back up into this area. Okay, well, I use whatever thingamabob I use to trade, and I think I'm going to get long here. Or I see this as a CP, I'm going to buy it. I think there were plenty of traders that took that. So that's what I would say about it. Okay, David, anything to wrap us up here?
No, I think that's it. I just, you know, I think there's everyone probably received an email earlier this week. There are a couple slots left in the map and the first week, the thing that we're doing. So if you want to do that, you know, take action, get that done. If you don't want to do it, it's not for you, no problem at all. I just want to make sure that everyone's aware of it. Thanks everyone for their commitment to us over this past month in the trial, and we really trust that this was a valuable trial for you, and look forward to you continuing on with us.
Yeah, absolutely. And I would say there's actually sort of funny, there's a couple of you that I have had some interaction with, and I've thought MAP would be a great fit for you. And especially with the decision-making course. And a couple of you have been dragging your feet on that. And I would just say, if you've had the thought and it seems like it's a fit for you, just do it. And, you know, we're committed that it's going to be super valuable. If there's this sort of value in a 30-day trial, imagine what we could do in a year with you. So, you know, that's our commitment. And, you know, I echo what David said. So thanks for being here today. For those of you that are on the trial, thanks for checking it out, whether it was for you or not for you. And then obviously to the ones who have been here and are the foundation and, you know, what we do here at Day Trade Like a Pro. And the one consistent thing, whether people cancel or whatever, everyone said the same thing. This is an incredible community of traders. And that's on you guys. I mean, it's
absolutely
what you have built here. I mean, if I died and David died, you know, you guys would just sort of take over the Discord channel and things would just sort of keep on going right along the way they are. And so I really acknowledge you for the community and what you've created here. And it's really cool to get to be a part of it. So thanks for making our dreams come true. It's really been fun. And, you know, trading can be a lonely thing to do. So it's really fun to have such a great group of people. So thank you for that.